Now, listen this technical issue. Open your eyes, please. You all have studied IS 41, the IS related to agriculture, goats, cows, right? IS related to agriculture. In IS 41, listen what is the requirement. In IAS 41, we record all these animals at fair value less cost to sell. We record all these animals and these plants at fair value less cost to sell with changes taken to PNL, with changes taken to PNL, with changes taken to PNL, with changes taken to PNL. Yes or no? With changes taken to PNL. And what is the logic? Let me give you the logic as well. Listen. For example, I have a farmhouse. And there are a lot of goats there. So at the beginning of the year, the goats were I bought some goats. They were just 1 year old and they were short sized. Okay. So now I invested money on them. I hired boys so that they look after. I have a property. I have to pay the rent for that property where these goats are kept. Listen, I have to feed them. So there will be lot of cost. It's a proper activity. So let us say, listen, at the beginning of the year, the fair value of these animals was £100,000. The fair value of these animals was £100,000. But at the end of the year, now they are grown, they are healthy. So now the fair value is £200,000. So IS 41 says simply book this £100,000 difference in the PNL as an income. Simply book this £100,000 in the PNL as an income. Why? Because you need to match income and expenses. You need to match income and expenses, because you are also incurring expenses. You are giving feed, you are giving rent, you are giving salaries to the people who are looking after your animals. So on the top of the income statement, you will book the income. The fair value change will be booked in as an income, and on the downside you will book operating expenses. So there will be a proper matching of income and expenses, and you will get the true profit. This is the logic. Okay, now listen what happens. Did you understand this first point? Quick response. Did you understand this first point? Please, quick response. Now listen. Now the issue is, we have few animals with us, and today a newborn baby of cow or newborn baby of goat came, right? So what is the treatment of this newborn baby? When this newborn baby comes, you know what we entry make? We make that animal debit and PNL credit. This is a gain, because we have got a new animal. We had only 3 animals. Let us say we had only 3 animals. Now with the birth of a new animal, now we have 4 animals. So this is again. So IAS 41 says to book this event as an income. PNL credit and that asset debit. Because you got the gain and there's a proper operating activity. You got it now. See, lambs born in farm have a zero cost, although right now the cost is zero to farmer, and are required to be measured at fair value. Well, why can't the Premier League now go to the UK? Think about the football. Why can't the Premier League football clubs do the same to the footballers that came through their academy? You know, these Premier Leagues get players from 2 sources. The first source, they directly buy external players from the external world and they pay them for the rights. And yes, according to IS 38, these rights are capitalized as an intangible asset. When you buy an external player from outside, you have to capitalize that player. But there are some Premier Leagues, they have their own academies. At the back, where thousands of footballers they generate, and out of those 1,000 footballers, they select one or two. They select one or two in their Premier League. You know what IS 38 says? You can't recognize those players. You can't recognize those players. So see, there is a comparison. In the farmhouse, when there is a newborn baby is coming, in the farmhouse, when the newborn baby is coming of a goat, you always recognize it at fair value and you book income. But in the Premier League, when there is a, when you are getting a footballer, from your own back office, from your own academy, you can't recognize it. What is the logic? The first answer is C. On farm animals, which IS is applied? C, IS 41. And on football player rights, which IS is applies? IS 38. This is the beginning. This issue is not solved. Let me solve it. Now the answer, see this, see the answer. Read the first answer. Read the first answer. You are right that IS 41 agriculture is explicit in requiring animals such as lambs that are born on the farm to be recognized as assets and measured at fair value. The issue is proper. The gain is then recognized in the profit and loss. After all, breeding is an operating activity. I told you to match. I told you the matching of income and expenses. I told you the matching of income and expenses. I gave you the example of goats. This treatment ensures a faithful representation of farmers' statement of financial position. If the lambs were included at their zero cost, they would be invisible, and therefore the accounts would be incomplete. Just think, at the beginning of the year we had 3 goats. Now we have 4 goats after a birth of a new baby. So we have to report the 4. We have to report 4 of them. Otherwise, this is this will be invisible baby. Okay. So a fair value of farm animals can easily be determined by observing their market value. Yes, you can easily calculate the fair value of animals using IFRS 13. This is because such animals are fungible in their nature. That is, 1 month old merino sheep weighing a certain weight will be worth at the same as next one and are regularly bought and sold. Yes, you know, many people buy goats. So in my country we sometimes buy goats through their weights, through their by weighing it. So there is a standard market. So see, in IS 41 we recognize these animals at fair value. We recognize these animals at fair value because we need to match. The major objective of that thing is matching principle. Okay, right? And one more thing, if you have studied IS 38, in IS 38 the initial recognition is also recorded at fair value less cost to sell. Initially animals are recorded at fair value less cost to sell. Okay, now next thing is football. For football players, technical issue I'm going to discuss. Many times it came in exam, you know. But let's start with a quiz. How to book intangible asset at initial recognition? Tell me, at cost or fair value? Come on, all of you. This I want to teach this lesson. What IS 38 says, please all of you tell me. At initial recognition we have to book IS 38 asset at cost or fair value? Wait. I repeat, at cost or fair value? IS 38, cost or fair value? Initial recognition is cost. Please write it somewhere. Initial recognition is cost. In IS 38 initially you need to recognize asset at cost. And now all of you open your ears and eyes, please. You know what cost means? All of you look at here. Cost means consideration provided by us to get that thing. Cost means consideration provided by us to buy that thing. For example, look at here. You are selling this phone. See, you have this phone and I want to buy this phone. In return, I am giving you this cup. All of you, please look at the screen. You guys have this phone and today I convinced you guys to sell this phone to me. That means I'm buying this phone from you and in return I'm giving you this cup, and this cup costs $10. This cup costs $10. Okay, so that means my cost for this phone, is $10. So don't forget, please, students, cost means whatever you are paying to acquire that thing. Whatever we are paying to acquire certain thing, this is called cost. Are you getting the meaning of cost? Okay, now don't sleep. I'm giving you the proper logical answer. This is, I have raised a, this is a very technical issue which I have raised. These such issues may come in current issue. Now look at here, look at here, look at here. It is also true that when a Premier League football club buys a players, see, Premier League football clubs have two options. From two sources they get players. From two sources they get players. The first sources they directly get from external world, from other teams. So in that case they have to pay. In that case they have to pay, and this is a proper transaction. The amount can easily be calculated. They have to pay. They have to pay $1 million, $2 million. So there is a consideration. The cost can easily be calculated. The cost can easily be calculated because we are paying. We are paying the amount. Okay, and I just told you in IS 38 you have to record your intangible asset at cost. You have to record your intangible asset at cost. Now read it. It is also true that when a Premier League football club buys a player's registration, the club recognize an intangible asset in accordance with IS 38. After all, see the logic, see the logic. After all, there has been a transaction, a sum of money, see the cost, money, the transfer fee has been paid, and the buying club controls the player's registration, which should bring future economic benefits. So yes, whenever you buy external player, you record it. But by contrast, please, however, academy players, my own academy, I am a football league, I have my own academy. However, academy players that become professional footballers are not underpinned by a single transaction. You cannot calculate the cost. You cannot calculate the cost because you have 1,000 students. Just think, you are spending on 1,000 students, and out of 1,000 students only 1 or 2 becomes hero. Only 1 or 2 becomes super hit, and you never know who will going to be super hit. So this is a blind investment. There is no reliable measure of either their cost or value because they are not bought or do not have value that can be reliably measured. I told you IS 38 says to record it at cost. IS 38 says initially intangible assets are recorded at cost. So now you are generating your own players, and you never know, and you are just giving efforts to them. You are doing their counseling, you are giving them time to exercise, you are giving. So these efforts which you are investing, you cannot value those efforts. And one more thing, out of 1,000 students, one will become hero. One will become hero. So you never know that who will become hero. See, there is, see the example, there is after all only one Marcus Rashford, and there was only one Steven Gerrard. Those who see football, they know these names. Those who see football, they know these names. Okay, now this is the reason. That's why if we get the players from our own academy, we don't capitalize, but if we buy players from outside world, we capitalize. Now giving you the same logic, there are two names. One is purchase goodwill. Student, this is the right time to learn to understand this concept. Many students at this professional level, they don't know the logic. I know many students, even I've seen the interviews as well. You know, purchase goodwill in business combination, consolidation, purchase goodwill we capitalize, but we never capitalize internally generated goodwill. Why? Same logic. We capitalize purchase goodwill, but we don't capitalize internally generated goodwill. Why? Reason. For purchase goodwill, you give cost. For purchase goodwill, you pay, and whatever cost you are giving, that can easily be measured. Yes, that can reliably measured, whatever consideration you are giving during takeover. But for internally generated goodwill, listen to me, for how internally generated goodwill is created. How internally generated goodwill is created? By giving good service, by replying to the message of students, by attending the call of a student, by attending the call of a student at midnight. Just think. So how can I value these efforts? By smiling to students. So how can I value these efforts? Yes, internally generated goodwill is created in this way, with good marks, with positions. Just think. So you cannot calculate the cost of internally generated goodwill. That's why you cannot capitalize. That's why, because IS 38 says to record it at cost, and cost means whatever you are paying, whatever consideration you are giving. And for internally generated goodwill, the consideration what we are giving cannot be measured, those efforts cannot be measured. This is the reason. I hope you got it. It is a technical issue, but now you guys are in final level. This is your last paper of reporting. After this paper you won't study reporting in ACCA. But yes, if you do any other qualification like ICAEW, you will again study, but this is your last paper of reporting, so you must know these technical issues. Yes, and no doubt it is a technical issue, it was a technical issue.